Good evening, everyone. I hope you all are having an amazing weekend. Been very relaxing this weekend. It was very good weather in Phoenix, so had some time to go out, do some hiking and things like that. But anyway, so the topic for today that I wanted to discuss was trend lines. There's a lot of questions around how do I enter a trade, how do I exit a trade, if I'm not in a trade, I'm in this FOMO mode where I don't know where to really enter into the trade and things like that. So for that purpose, I think trend lines will really help you in the long run too. Like I personally use trend lines and support and resistance levels to assess how to trade, right? If you see, I have those horizontal levels that I draw where I say, okay, you know what, this level breaks, we go to this level next, and things like that. I keep talking about price targets based off the level breaks, and once the level breaks, I keep upgrading the price target. So we usually go level to level trader, right? We are always a level to level trader. We don't say, okay, S&P 500 is trading at 487. It can go down to 400. That's not how we talk at all, right? So at least that's not how I talk, because like there's a lot of supports that need to be broken for me to give that price target altogether. So that those are support and resistance levels. I'll go over those, how I draw them and things like that. It can be done in like about a 15-minute demo, so I'll need a full 45 minutes to an hour to do that, because I kind of go over different time frames from weekly, daily, 65, 15, and then I start drawing support and resistance levels on that, and then start removing the support and resistance levels based on no intersection of these, or overlap of these levels on different time frames. I don't see that. I just keep removing those levels because they're not as significant anymore. So that's how I kind of, just to give you a short overview of how I kind of draw it, because you will see them on my charts. I'm just going over that, and I use trend lines quite a bit. Trend lines are one of my primary technical analysis tools, which help me to understand where there are breakouts, where there are retests happening, what is the complete trend in the market per se, and things like that, right? So that is essentially what trend lines are for. But before I get into these trend lines, I would want to clarify about 2 to 3 points that are, first one, trend lines, you want to use them based of the time frame of your trade, right? For example, I kind of draw trend lines for you every day, right? Like I show you 15-minute charts, I show you 5-minute charts. Basically, I trade off 5 minutes and 15 minutes, and then if you look at my daily analysis or daily recaps, or trade ideas that I post, they're mostly based off the daily time frame, right? And then you have and the weekly time frame analysis, where I kind of tell you where and what to expect of a particular trend line. Like for example, the Tesla analysis that we did, every single time we were hitting the trend line, we were seeing about 30 to 40% correction on Tesla stock, and that's essentially what happened again, right? Like when it was trading at around 245, that's when we were like, okay, you know what, there's a 30%, 40% correction that happens off this trend line, so we'll probably sell some cash secured puts. If we had shares, I would say covered calls, but I don't own shares on Tesla. But anyway, that's why we sold cash secured puts on Tesla for a correction of about 35 to 40%. If it does come there, we'll buy the shares. Otherwise, we'll just sit out and enjoy the gains that on the CSPs that we sold. So like the things like these, the longer the time frame, it is more for a swing kind of scenario. The shorter the time frame, it's more of okay, I'm going to hold this particular trade for the next 30, 60, 70, 60, 90 minutes, and probably exit out. Then I usually go to the lower time frames, where I'm charting out trend lines for you on the 5-minute and the 15-minute. Another thing that you want to understand is the trend lines tend to change quite a bit on your lower time frame. So for example, if I'm drawing a trend line on a 5-minute chart, it can, in the next 30 minutes, you can see a different trend, and you might want to be flexible to draw a new trend line to understand the trend for the next next few minutes or the next couple of hours maybe, right? Like the lower the time frame, the faster you want to adapt yourself. But higher the trend line, you want to use that trend line for breaking, for understanding the momentum or understanding retest, to understand the trend of the overall market or the overall sector or the overall stock itself, and try to position yourself. So just a couple of points that you want to understand before I dive in. And another thing that I kind of see in a lot of charts, like posted by quite a few traders, which kind of irritates me quite a bit, is they have like hundreds of trend lines. They draw a trend line like that, then they have a trend line like something like like that, and then they have some other trend line like there's another one like here. This is another trend line, and then they have another trend line which looks like that. And then they have another trend line which looks like maybe like that, and they're like, okay, when I look at that chart, I'm like, what the hell am I looking at, right? Like I really don't know what I'm looking at, and it kind of bothers me quite a bit. I'm one of those people who I think I have an OCD when it comes to charting, where I don't see good charts. I just turn it off. So I like, they have to be clean. They have to be like very clean to understand what's happening. Just give me a blank chart. That's good enough for me in a way, because price and volume are the key aspects of a chart that we always use for trading. Trend lines and support and resistance levels are just assistant tools for you to understand what's happening in the market, just by doing some homework. So but anyway, so firstly, how do you want to draw a trend line, right? Like let's go with SPY on the weekly time frame. I want to give you an overview as to how you want to really look for a trend line. So firstly, when you look for drawing trend lines, the bigger the time frame, like weekly charts, monthly charts, they are the ones that you want to look for when you're looking for swing trades, right? Like let's say a couple of quarters out, or a year out, or looking for leaps or things like that. That is essentially where you want to chart your trend lines, right? Like you want to, like for example, this is the weekly chart on SPY. What you want to look for when you're drawing a trend line is you want to see points of significant reversals or bounces. In the sense, if you see what do you see in this chart, where do you see significant reversals and bounces, right? Like the first one, like if you see, this is one place where I got a reversal, right? Like this is one place I got a reversal, I got a reversal, I got a reversal, I got a reversal, right? Like this is where I got another one here, another one here, another one here. So these are places that are more significant in a sense, like where you can clearly see a reversal and say, okay, you know what, that's where the market really turned. And those are the points you want to join together, right? Like you want to draw a straight line where you want to get maximum number of those points into your trend line, so that you understand what's the overall trend of the market. So for example, in 2022, after we broke out, we were talking about measured moves and things like that. I won't get into that per se. I have a beautiful thread on it. But then if you can clearly, you can cleanly draw a nice little trend line like that, right? Like if you see. So one thing that before I go into the details about drawing this trend line, one thing I kind of hate about drawing a trend line, and I see quite a bit happen also, is I don't like you either use the ticks, right? Like you use like the wicks, like these, like WICKS, like you use those, or you use the bodies. Like whatever you do, try to do it as consistently as possible. Don't try to do the wicks here and then oh, you know what, I'll do that. That's a much better trend line. Don't do that, right? Like you see how many times I'm like crossing over these bodies of these candles. You don't want to do that. You essentially want to keep it at I technically do it at wicks, right? Like I just feel there is a lot of price action that can be caught on those wicks intraday moves also, right? So because they have volume, and if you're doing something on the daily and the lower time frames, I generally, or I wouldn't say generally, I'm always removing the pre-market data per se, because price and volume are the two very important things that I use for my analysis. So pre-market, you don't have as much volume. Yes, there is price fluctuation, but there's not much volume. So when there is not much volume, I'm not going to take that price into consideration. I just feel it's fake, right? So that is essentially what I that those are certain things that I kind of follow when I'm going after lower time frames as well. But here, if you see, this was the trend in 2022, right? So this 2022 January, yeah, this was the trend. We were seriously in a very nice clean downtrend back then, and once we broke out, see, like these are where you can use trend lines very, very effectively, right? Like we had a every time we hit that trend line, we had a nice little correction, and like you could have scaled out, scaled down, like sold covered calls, or sold some of your long positions or things like that. But then once you broke out, you would have easily taken a long position, right? Like these are what momentum traders kind of do. Like once you broke out, I still remember when we went long here, and the most long that we went was here. I'll talk about that later. But then once you see that, momentum traders get in, and more often than not, when you see such a strong trend line break, right? Like this is a weekly time frame. If you see a strong trend line break like this, you usually see a retest of the trend line as support. It has to say, okay, I'm a trend line which was broken. Go ahead and test me again. I won't break down this time, right? So that is essentially why a trend line is so important. So on this retest is where you can probably average down, and have some stops ready, and say, what, the trend line really did not work, or things like that. And this position here, I would say, is one of the most most successful traders try to enter positions there, like the spot that I just showed you, because like it is a retest of a very strong trend line which was acting as resistance, and once broken, it starts acting as support, right? So that is where you want to go long for. And then like you could have easily ridden you could have easily ride the wave there. So that's essentially why you would want to use some trend lines, and why you want to draw some trend lines and understand what's the complete picture of the market that's happening. I can give you a very small little example here on I was looking at Adobe when I was doing some analysis this morning. This is a very interesting one too. If you see, the other day, I think I posted this on Twitter as well. You can go over Discord channels also. You'll see this. This is a very nice example too, right? Like this was the peekaboo setup that I talked about. The next day it went higher, but then after that it went lower, and now see where exactly it retested, right? It retested that trend line which was broken as support, and then it just shot up towards our price target at 627, right? So these are certain examples that I can give you, like, and try to keep it very short and sweet, right? Like don't try to go over multiple setups that are there and say, oh, you know what, there is this trend line here, there's this trend line there, there's this trend line there, and then you're like totally confused, and they're like, okay, I just don't know what's happening here, right? So all you need to do is understand where there are significant reversals on the day, right? Like this is a good reversal point. Like if you would have said, okay, you know what, this, I'm going to use this point as a reference for a particular trend line. Oh yeah, go ahead, right? Like is it relevant right now? I'm not sure, but like, let me draw it, right? Like I want to use this, right? Like let's use that, right? So all these are points where we had nice little reversals. So if Adobe was going to fall off, right, I mean, like this trend line, I would go long on this trend line if it really did come down to that point this year, right? So this is another trend line that I would say very potent, very very nice trend line, which was acting as support. And where would my stop loss be once this trend line breaks on the daily? Like, this is a daily time frame, right? So on the daily, if this trend line broke and we have a close under that on a daily time frame, I would be more cautious and say, okay, you know what, I'm going to see it one more day and I'm going to get out, right? Because like just like what we talked about on the weekly analysis on SPY, where we were talking about trend line, maybe it breaks down and then we have a dead cat bounce to retest this trend line. That is where you would want to get out, because now it has been a significant support before, and once it breaks down, we'll have a significant resistance there, right? The support now turns resistance, and now that's the area that you want to get out at, right? So that's how you want to trade. That's how you want to use trend lines to your advantage. And then you might also ask me, like, okay, you know what, trend lines are so good, why are you not just using trend lines? The best setups that I have played, or more confident setups that I have played, like if you all remember last week we played Amazon, right? Like everybody was asking me out of nowhere, why are you interested in Amazon? Market was rallying, Google was up, Microsoft was up, Amazon was in red. And when I looked at Amazon, it was at 154. Like 154 is where we have the trend line support, and also we had the level. Like when the trend line support and the level are coinciding, that's where I'm like, okay, you know what, this is where we can have a very low risk and a higher reward kind of scenario, because the complete market is kind of bullish, and most of the tech sector is, I mean, like the cloud sector was running, and maybe Amazon will go, and being that at support, I have a very minimal risk. Once it kind of loses 154, I'm good to go. Like, I can cut off my stop loss at around 30-35%. I'm pretty good. So that is the mindset that I kind of go after. And when a trend line and a support resistance level always coincide at the same point, I'm usually very excited about that trade. Like I'm more looking forward to such high confidence trades than looking for a random trade that might happen and it can work out, right? So this is something that you want to look for. And okay, let me go back to SPY, and we can talk about a little bit more about a particular level. Like I just talked about levels of confluence, right? So if you see support resistance levels, right? Like if you something that you can see here is market did take quite a bit of time to break that 477.50, right? Like how do I know that? We went up, took some time, went right back down, went right back up, took some time, went right back down, and then finally it broke out, right? So this has been a couple of touches before it kind of broke out kind of level. So yes, like when the market comes down, 477.50 will act as a strong support, right? Like it acted as a resistance here. Once it broke out, now it's a strong support. So when someone says, what, SPY is going down to 450, or it's going to 440, or it's going to 300, whatever that is, I say, okay, let it break 477.50 first, right? You see why I'm talking about 477.50, right? Like it's a confluence zone of multiple multiple things, where you have a trend line that has not been broken, and has been a strong support, and then you also have the support resistance level right there, and it is a layer of multiple confluences. And if you go back onto probably onto the 65-minute chart, where we are also looking into bull gaps and bear gaps. On the daily, maybe we can't see that, but I think there will be. Okay, there you go. There's a bull gap right there, right? So there are so many multiple confluences right there, and until and unless that is broken, I can't really even say we are going down to 460, right? So that is something that you want to understand, and use these trend lines to your advantage. And on this hammer candle here, if you were saying, okay, you know what, we are going to 477 and going down, I wouldn't really agree to it, because we have another trend line that is somewhere up there. Like, you can't really say where we are going to stop here, and until and unless there's a clean real reversal that can happen here, this is not like really a potent trend line. But then, until and unless, we have a clear reversal, I wouldn't really call that calling a top there or anything like that. It's just a trend line there, and I know it's not broken yet. It's not and if it does have a reversal right here and goes back to the lower trend line, that's when you want to keep an eye out for that, right? Because if we see a bounce right of 477.50, where exactly would we go back up again to this particular trend line here? So I'm getting ready there, right? Like, this is not a real potent trend line, but it is valid though, like, right? Like, I'm still on a lookout to understand where the next trend line is, or where the next trend is going to be. But this is a very potent trend line, because you can see there was a nice little bounce, came right, a nice consolidation, again bounce, came down, nice reversal, came down, nice reversal again. So this is a very, very important trend line that needs to be broken by the bears to really push the price down to 470 or 460 for that matter, right? So that is essentially where I kind of use trend lines, and how I kind of draw trend lines. I hope this kind of helps. If there are more questions, I'll definitely try to answer them in our chat. I'll go. Like, I have plans for multiple sessions like these on a bigger scale, like 30-minute sessions, and we'll go over Zoom interactive sessions, and we'll talk more, and with a selective smaller group, and like, we talk more in private, like, kind of thing. But I hope this is helpful, and that is where I kind of like using trend lines and support resistance levels. These are the levels that I tend to, trade the momentum off, trade the trend off, and try to swing if possible, and things like that. So yeah, I hope this is helpful, and without further ado, I want to go over the rest of the channels, as rest of the weekend call we have as well, where we start off with our seasonality. Here on the seasonality front, first. Okay, so first thing, again, every week I go over this, and I kind of tell you, this is the statistic of the last 25 years, 24 years, 1990. Since I was born, I just tried to take that metrics. Since 1920, this particular day, the day after OPEX of, the last week of January, this is how it kind of looks like. S&P 500 kind of looks weaker to begin with, and the last 3 days of January, you see some kind of a selling. You see under 40 and over 60 are the numbers that I kind of keep a little bit more, give a little bit more weighting to. Anything closer to 50 is like, it's a coin flip, and I'm not really concerned about those. But yeah, S&P 500 kind of starts off week with 38% being green on that particular day, which is Monday. It usually starts off a little weaker, and it remains weak for the first half of the week. And Thursday and Friday, which are the first 2 days of February. February usually is a bad month for the stocks overall, but the first 2 days are usually very, very bullish. Thursday, you don't want to be short on you don't want to be short on the market. That's essentially what these statistics are trying to tell. A personal opinion, I have used these for quite some time. I know most of you who have been using these with me and understand what's happening here can attest to it too. I think this is a very important thing, important metric or statistic to understand when you're trading off your weeklies and trying to swing something. A Thursday seems to be extremely bullish, so If anything, if the market looks bullish, I'll probably swing some calls. If it does not look bullish, I'll just probably sit out and watch it, because of that statistic. I don't mind missing out opportunities in the market at all, because there are unlimited opportunities that can make you in the market. So if I miss it, I miss it. I really don't care. If we do see weakness on Wednesday, like, strong selling after FOMC, after Powell comes out and things like that, I'm not going to short the market, say, okay, you know what, I'm going to buy puts and swing puts, because of the strong seasonality that we have into Thursday. If we really see a trend on Thursday, that's when I'll probably play some puts. Swinging weekly especially, is going to be detrimental, right? So the next day the option technically becomes zero, if you're wrong. So if you do have a lot of profits, probably we'll probably take a counter trade into playing calls, but I really don't like playing like that. So we'll see what happens. But Thursday is something that I want to watch for. But the first 3 days seem to be a little weak this week. So we'll see what happens there. Next one is earnings calendar here. Very interesting a week here. First one, we start off with SMCI. SMCI is one of those stocks, like, I have been trading SMCI since the last time it reported earnings, and it jumped 34%. If you remember that trading flow, where someone bet 1.5 million into its earnings, and they blew it out of the park, right? So that was the first time when I started trading SMCI. This was very recent, like 8 months or so. So I did go back and check what SMCI's general thing is. SMCI usually, if it runs into earnings, kind of craters after earnings. So we might, this time around, they already guided up, so they might not pop as much as everyone would expect if they blow out the earnings. But then we might see a little bit of a flagging pattern towards 450, 430, or something like 435 or something like that, and then base for some time. I'll show you the patterns when I talk about charts later on in this video. But then that is essentially what I'm expecting. I'm not going to touch SMCI into its earnings. So that's something that I'll be doing. Okay, all right. FedEx is the proxy play if you want to really play UPS earnings. I did go over the flow. It was very little flow to even assess, say, this is bullish or this is bearish. But overall, I felt there's a very slight bullish tilt towards UPS earnings, so keep an eye out for that. Next one is Microsoft. I already talked to you about this. There is heavy put flow. Heavy call selling on Microsoft, and also like a little bit of a put buying into its earnings for not for this week but for next week. I did go over. I did post out all the earnings snapshots and what to expect in Microsoft in our game plan channel. Just go over the channel and you'll understand what's happening with the rails and where they are positioned into Microsoft. AMD, very similar story as SMCI. Usually if it runs into earnings, kind of fizzles around for some days, and then after that it kind of breaks out. So AMD, there are quite a few bets on 200 calls that are going on in AMD as well. Next one is Google. There are heavy put selling that's happening in Google than call buying. There is a little bit of call buying, but then there's a lot of put selling. We ourselves sold puts and also sold calls. Like, what we did is called a wheel strategy, where we own shares. We bought them at 121 after we got called off the earnings prior on Google at 131. So we bought back at 121. So now we sold 130 calls, and we also 130 puts, and we also sold 155 calls. I know we might get called off again if Google goes to 165, but it is okay. I'll find an entry again for Google, and we'll probably play it. Don't worry too much about it. If we get called off, it's totally fine. 35 points, it's good. It's good, a good profit there. So keep an eye out for that. Starbucks, there's that unusual flow on 99 calls. I don't know if it's a Twitter pump or not. I will probably play it. We already exited it once with about 20-25% profit last week, I think. But and now they are kind of down. The weights are still down, and then they but the good thing is I will check the OI tomorrow morning also and give you an update. But they are still in position, and they were down about 35%, 35% by the end of Thursday. I didn't check them on Friday. I will check them again on tomorrow morning, and we'll probably play them into earnings. That's mostly about Starbucks. I mean, when I say probably, I really don't know what the OI is, where the volume will come. If they book their losses or things like that, I'll probably get out. I probably won't be interested. So keep an eye out for that. Boeing. Bad news all over. I think they will guide down, is what I'm expecting. Boeing actually has to break 200 and move towards 170s again. Probably where you would want to go long for, if you really like the stock. I hate the stock personally. I have never made good money on Boeing. It gives and it takes. So last week was the first time I was very happy with the execution that I had on Boeing. Like we had calls, like the next day in the news came out. Actually, we sold calls for about 104, but we left like 10 runners, a $600 position that we left. And the next day it opened red, and we were very unbiased, and we were like looking into puts, and then those puts went 5x or something like that. So that all comes with positioning and how you position yourself, right? Like if we had like a lot of calls, we would be like, oh my god, can I like average down on calls or something like that, which I strictly I'm opposed to when you're trading options. But like I have seen people do that quite a bit. So Boeing is something that you want to look for on the downside if you want to play it. Next one, Qualcomm. Not really interested. We were really interested in Qualcomm at 105, 107. I think Ravi was one of them who loaded Qualcomm, but I don't know what his position on Qualcomm is right now. But this is it's a good stock still, but needs a little bit of a pullback this week maybe. We'll see through its earnings. Apple. There are quite a bit of call selling on Apple. A very mixed flow on Apple going into its earnings. For the first time I'm seeing this after like 6 earnings or so. I did see some 200 calls and 205 calls in the shorter term, but then there's a lot of call selling for 210 calls into September, October, and December. So I don't know what I mean. They are expecting Apple to stay flat. That's what they're expecting because of some China tailwinds or things like that, headwinds or things like that. I really don't know. So keep an eye out for that. Amazon, absolutely bullish flow. That this is why I did not sell covered calls yet on Amazon. 160 was my target, hit my target, but then I'm not selling covered calls because I feel 165, 175 is pretty 177 is pretty possible on Amazon. After its earnings, if it does tank, anyway, we sold CSPs, right? Like we sold cash secured puts on Amazon when it was trading at 144 for 140 puts for 2.2. We ate most of the premiums. If you want to buy them back, it's totally fine. But I personally would not. I mean, I don't mind averaging up on Amazon. If it does fall off to 140, I'll probably buy more shares. Our average right now is 97, right? 97.5, 97 something. Sold covered calls a couple of times, sold CSPs a couple of times, looking pretty good. If you are a holder of Amazon, your target should be double of 95. At least 200 should be your target. So that's my target on my shares anyway. Meta, it is ridiculous that to say that they are still in calls. I mean, deep in the money calls. Folks that have bought in 2023, February, March, April times, they are so deep in the calls, so on their leaps, but then they are not exiting out. Some of these whales are up about 750% or so. I mean, they are still in the OI. For March. So I don't see much puts. Put buying, but there is some call selling on Meta. So for more shorter day kind of analysis, I'll give you a much better much better and a clearer picture in the last 60 minutes of the trading day. So if you want more analysis on Microsoft as to what I'm seeing on the flow from the whales, I'll on Thursday I'll probably give you in the last 45 minutes, and you can go from there. But these are the ones that I'm looking for this week on the earnings calendar. A lot of big companies are reporting, so keep an eye out and be a little bit more cautious as to what you're swinging, because I've seen some ridiculous comments all over Twitter, like people just don't understand IV, like implied volatility. They say, okay, you know what, I'll buy calls, I'll buy puts. There's going to be a big move, and I'm going to win. I mean. That's not how it works, right? Like, you have IV that kind gets busted out, and you can probably lose on both sides if there is no movement, right? So okay, let's say there's a movement of 3% on Apple, and the measured move on Apple is 3% into its earnings. If you can go back into the options calendar and check it out yourself on the at the money strike. But then, like 3%, right? Like, that's the implied move, and Apple moves up 3%, and you have calls, let's say. Those calls will probably open worthless the next day, right, on Friday. So just understand, obviously puts will go to zero. So just understand that you should not be doing such silly things. Yes, if there is a move, yes, you will make quite a bit. It's 1 in 10 that happens, and you have to be able to hold. You have to be able to hold 10 out of 10 to be able to break even, and the 11th one might be the one that really runs and make money. It's rather, like, instead of buying these lotto tickets, it's better to, like, grow slow, make your slow growth, and go from there. But anyway, that's what I'm expecting of the earnings calendar here. Next one, we have the economic calendar. A lot of economic calendar data, a lot of macroeconomic data also that is important this week. The first one is the JOLTS data that's coming, job opening data that is coming out on Tuesday. This comes out, 1 hour. I mean, 30 minutes, I think 30 minutes from the open, right? Like, yeah, 30 minutes from the open is when it kind of comes out. So keep an eye out for that. After open, we have the ADP employment change that comes out on Wednesday. But then on Wednesday, the most important thing is Powell, who comes out at 2:30. And he moves the market pretty wild. I'll probably try to get on a call with you all, live trade, and you can probably snipe some 0-day SPX. I am staying away from those as much as possible because of no movement or less volatility in the market, as the VIX is pretty low. But if we do see a bigger scale drop coming out on Wednesday, we'll probably try to play some 0-day SPX, because the drops can give you a pretty nasty rug pull at these levels, because there is quite a bit of fear that can happen in the market. So keep an eye out for that. That's another important event that you want to look out for. Then you have 2-2, that's NFP. These are the most important macro events that you want to look for this week, and which can influence the price quite significantly. So keep an eye out for those in the market. So that's mostly about the economic calendar. So let's quickly get into our charts. I won't be talking about the weekly time frame as much. Everybody knows what we are talking about. We have been in a downtrend. Now we are in an uptrend. To whatever people try to say, we are in an uptrend. There is nothing wrong with the market. We are not in a recession. Whatever that is, I am not a believer in a doomsday scenario in the market right now. Luckily, this time around, we did not see double top posts come out, which is very interesting. So anyway, this is what you want to keep an eye out for. We are in an uptrend. We are still looking very strong in the market. So not much on the daily time frame, but I want to talk about the 65-minute, where we were talking about this 65-minute on Friday as well, after we finished our trading, where if we did see some kind of a break under this trend line here, right? Like this is one of the trend lines where we based, went up, went down, went up, important trend line, and then came back here. We bounced right off that as well. So if we did break under that, we were expecting a little bit of a pullback towards 484.50, 484. But yeah, I mean, we closed right at 487.50, which is not odd. That was the gex levels that we were talking about as well, right? If you remember, I was posting this chart out. So that is where we kind of stopped. And and the other part that kind of was something that told me to wait, or like get to look for a confirmation, even if we kind of broke down, is we don't have a bear gap open. There is absolutely no ammo that bears hold here, right? Like there's absolutely nothing that bears hold here. Like what is bearish about this chart, right? So for me personally, I need a bear gap. I know there's a bearish divergence, right? Like if you look at the RSI, I kind of see that bearish divergence, right? Like you see this one here. Like you see, yeah, there is that higher high. I wish I had a different color for this. Wait, let me see properties. No, this one here. Let's say let me use blue, right? So you see this higher high here, and then the RSI is not able to make that higher high, right? So so that's the bearish divergence I'm going after, and saying, okay, there is bearish divergence. There is so what is a bearish divergence trying to tell you? Even though the price is going higher, bulls are not strong enough to break out of what's happening here. They might not have a follow through. They might not see as much of a upside here. Your risk reward to the upside is not as good as you have for the downside. This does not mean, by the way, go play puts, right? It basically tells you to be a little bit more cautious with your long positions. The momentum is still very strong on the bull side. If there is a dip, I'm still trying to buy calls. If you see what I'm doing in the market, but if there is a reversal, like last week when we saw a little bit of a reversal right here, right? What did we do? We played puts. We played 0-day SPX puts, right? So that is essentially what I'm looking for on the 0-day SPX puts. I'm not looking to play 0-day SPX puts every single day, but when there is a reversal like that, when there is a hint of a rug pull kind of scenario where, like you see a bear gap, and then when we see a little bit of a pullback like that, that is when I want to be aware. I want to be ready to play those puts, right? So now here, this is what I'm going to take this off. I don't trade off the RSI at all. It's a lagging indicator, and I kind of hate it. But anyway, like that is a bearish divergence I'm talking about. It's still active. It can still work out in bear's favor as long as this trend line is broken and there is a bear gap that is open. I don't know what futures are doing right now. I did see them when they opened. They were down about 0.26% or so. But we definitely need this trend line broken in the first hour, and the trend line should hold for the next 65 minutes. I'll keep you posted tomorrow morning, but then, like once we see that, there is a very high chance that we go back and revisit this particular bull gap that is open, then completely fill it, probably bounce intraday, and then we'll probably reassess. Right now, as far as I see, if we do break this bull gap here, we see a dead cat bounce, and then we lose 480 to 50. You have a very, very good chance. I mean it, like a very, very good chance that we see 477.50 this week, right? Because if you see the structure, right? Like if you see bulls made a base, right? Bulls made a base here, right? Like they went up, they tested it, went right back down, tested it again, went right back down, and then now after that they broke it. And if they did retest it, that this level would have acted as support. They did not retest it, and they just ran, right? Like everything just ran. That's essentially what happened. So this structure here does not offer you any support at all, right? Like once you break this, this is the only region where there was some basing, or there's some concrete that bulls put through in the foundation that they have built. There is no concrete here, right? It's just vacuum, right? Like once you break this level here, you have a very good chance of playing puts towards 477.50. So don't be in a hassle to say, oh, the market is dropping from 484, 485 to 482. I'll go play puts now at 482. Don't be that person. Wait for that dead cat bounce, then you play puts when 482 breaks, because you have a much bigger 50 point 5 point move on SPY when 482.50 kind of breaks, right? So that is the level that you want to look for. Break and close off that level, can play some puts, and probably play some puts on weeklies, and you can swing them and make very good returns. I'll keep you guys posted as to how I'm going to trade it anyway. That's what alerts are for, like giving you a reference as to how I'm trading my account and things like that. So we will see what happens there. But right now, just understand that there is bearish divergence. Bulls have complete momentum, bears have no ammo, and you need that trend line to break. And the best way to possibly get the maximum return of your puts is at 482.50 break after a dead cat bounce, right? So these are the levels that you want to look for. 480. So where I kind of expected the market to peak out was 490 to 490.50. We are kind of reversing at 489, so I kind of dropped my level by one. That's an update that I did this weekend. But 490.50 is where I kind of thought we would cap out on this particular rally before we get a little bit of a pullback towards 477.50. If not, it's fine. 1 point. I'm not really concerned about it. But that's what I'm seeing here on SPY on the 65-minute time frame, and how I kind of have my mindset towards playing this market. So that's mostly about SPY. Next one is QQQ. Where's QQQ? Anyway, I'll just type it out. QQQ. On the daily time frame, I had 432, 434. That's the cap out level on QQQ is what I thought. But then we did see a little bit of a gap down, which is still open. It's a very small gap down that's open. But keep in mind though, there is this island bottom that has been created on QQQ, and until and unless that is invalidated, I will not say we go back to 393 or 380, 370, whatever that is. I'm not really going to see that. I'm not going to really be worried about it at all. So you can kind of draw a very similar trend line here, just like how we had for SPY. But we only have 2 points that we can draw there, because if I go there, I'm cutting through the bodies of the candle, which I don't like. So nothing to draw yet, actually. So yeah, there's no trend line there. But until and unless this island bottom, which is around the 407 point, is broken down, I wouldn't be really bearish on QQQ this year. Any dip towards 407, I'll probably dip to 407, I'll probably go long at 407. If 407 is broken, we have 393. So 407 is the region where you have very minimal risk, where you can clearly set your boundary for a stop loss and say, okay, I'm getting out of this position, or things like that. So first level on the dip that I really want to look for is 407. Yeah, 413. There's that bull gap that is open still and can act as a dead cat bounce kind of support. 407 is where I would love to, if you want to buy shares on QQQ and have a stop loss, 407 could be a stop loss, and then buy somewhere at a region around 407, and you should be good. Is what I think on a short-term basis. So those are the levels that I'll be looking out for the downside. Anything to the upside, you need 430 break. 430 break is 434, 427, 421. These are your two levels that are there to the downside. 421 retest early in the week is kind of possible, I think, on QQQ. So keep an eye out for that. So on QQQ, there's a little bit of an ammo that bears kind of have right now, which again, if you look at the this is the daily here, so you can clearly see there's this bearish divergence too, right? Like I'm just drawing you roughly here. So there's a little bit of a bearish divergence that's there on QQQ as well. You can go down to the 65-minute time frame. You'll see a very similar thing that I drew on SPY, and more than SPY being bearish, I feel QQQ is a little bit more bearish per se, like because the bear gap that is open as well. So that kind of prompts me to say, okay, you know what, we probably might see 421 before we see earnings on these big tech, and that's for on QQQ early in the week, 421, and then 415, 413 is quite possible if we can break under 421 here on QQQ. Next one is IWM. IWM, I think we swung it into Friday or Thursday. I don't know. We got 100% on that, but then we kind of had like that peekaboo movement there, but then it didn't happen yet. Let's see what happens here. I'm still skeptical about how IWM kind of plays out rest of this quarter. I do think 177 break can see 205, 209. A sector that has been lagging quite a bit. You probably want to see some rotation into banks early in the week, and that might prompt some kind of a move here on IWM. But pretty open-minded. 199 is the level that I'm looking for here on IWM to play some kind of swings. The most successful strategy on IWM that I have seen personally for that has really worked out is buy the dip into the end of the day, and then sell the rip at the start of the day. It opens up and just sell it off, and it kind of goes up. So that's a strategy that kind of worked. I mean, I have not personally deployed it and made a lot of money. I just played it once last week, and we made pretty good. But if we do see anything on IWM, I think 205 is kind of possible on it in a short-term basis. So we'll see what happens there. No positions whatsoever. So we'll probably watch. Again, next one is we'll talk about our core list of companies here. First one being Apple. Like I said, reports earnings, and very mixed flow on Apple. 192 break early in the week, can probably see 187. 200 will be a pretty big level to break out of on Apple, and if we do see a pop towards 200 at on its earnings, I'll probably buy some 0-day puts to play the reversal on Friday. We'll see. Yeah, I mean, Apple earnings, what I am expecting personally, I think Apple will be down because of what we are seeing in China. This is the first time in a lot of time I have seen Apple actually cut its prices. So it really signifies a pretty bad scenario that they are going through in China, I feel. We'll see what happens there, but I am bearish on Apple into its earnings. So we'll see. We do have a pretty good profit into Thursday. We'll probably play some Apple lotos for a calendar spread or something, calendar put spread or something like that. We'll see what to do there. Next one is Adobe. This is a classic breakout, retest, breakout with an inside day. Adobe, we probably might see 606 again retested, but going into Microsoft earnings, and if Microsoft kind of blows it out of the park with its AI capabilities on Copilot, Adobe is another one that can really move towards 640 this week. But you want to hold on to 600 at least. Otherwise, we might probably see a retest of this trend line again towards like 595 to 583 on here. So not really clear as to where we would go on Adobe because of the options being traded very, very thin on it. But overall, I think it's a very strong stock. I wouldn't mind owning it at this particular trend line retest at around 540 to 530, and we'll go from there. So just wait and watch on Adobe here. Next one is AMD. That's not a valid trend line. Actually, that is a valid trend line. I don't know why it took it off, but AMD reports earnings this week. 174 is a must hold. Me personally, I would want to see AMD retest 155 to 151 kind of range after its earnings, and after that, I would want to get in. Very elevated premiums. Volume here as well. It's not necessarily accumulation volume. So we'll see what happens here. With Intel kind of guiding down, I just feel yes, AMD has quite a bit of tailwind that it can use for you know from the AI hype, but its PC market is also something that you want to look out for, the data center market as well. So Intel kind of guiding down is something that I really didn't like. So we probably might see a retest of 155 to 151, but then the whales have been hitting those calls. They have puts sold for 150, 155 and 165, and they have calls for 200 and 210. So really don't know what's going to happen, but me personally, I would want to wait for 151 to 155 retest, and we'll probably play it. Very nice. AMD is one of those stocks which follows TA really well, follows trend lines to the T. So it's a very nice stock. Like if you all remember, this was the rip that we caught. We missed this, then we caught a little bit of this, and this is a great stock. If you love trend lines, this is the stock that you want to always trade. Next one is Amazon. Finally kind of breaking out of that consolidation zone. It usually does that, and I feel this is going back up to like 173, 176 kind of range after its earnings. Given that how much of a bullish flow that we are seeing on Amazon, it's kind of weird that it's not breaking out. Anyway, it is breaking out of that consolidation. If it retests 154 early in the week, I'll probably sell some CSPs again for like 145 or 140s again, and a little bit more, and we'll probably play them. But I'm holding the stock for the long haul. 200 price target on it into 2026. Next one is AVGO. Nice little inverted head and shoulders breakout. We had that little retest earlier in the if you all remember, this was the setup that we were playing, where there was this little put play that you could have played when it kind of broke down, right? Like this one here. Yeah. So this was the put play that I was talking about. Everybody was saying, oh, you know what, bull flag, we can probably go out. It's not necessarily, compression cannot lead to expansion only on the one side. It can lead to expansion on either sides, like how we just saw. This was a peekaboo to the downside, and then we had a retest of 1050, and then we are bouncing back to 1280, and then we have 1300. So AVGO, I think this week, if it cannot hold on to 1200, we'll probably see a retest of 1150 again. 1150 is probably something that it won't break before its earnings, and we can probably see a little bit of a pop towards like 1200, 1240 into its earnings. So keep an eye out for that level at 1200. That's something that you want to look for. And going to AMD's earnings, AVGO can be affected by AMD's earnings as well. If AMD is like, we are not going to guide up, we are going to see how our data center and our PC market is going to work out, and then or the gaming sector is slowing down, so our PC market is also getting hit a little bit, and things like that. If they talk about this, we can see a little bit of a drop on AVGO as well, along with Qualcomm. So keep an eye out for that on AVGO. Next one is, let's talk about Google is another one. We did see that breakout. Don't say this is a rising wedge or whatever. Yeah, this is a rising wedge, but then we did see that breakout, and once we broke out inside day here, 154, and once 154 breaks, we have 160 here on Google. Possible target into earnings if we do see a pop. I'm not going to say we will definitely see a pop, because Google is one of those nastiest stocks which reverses very very fast, even after earnings. We can see a 1% 2% drop after its earnings, and next day we think it's going to go down, and it's up 5% on the day. So keep an eye out for that. 160 is the target. A little bit. We still, like I said, we still own shares on it. 180 to 190 is the target for this year. I'll probably won't sell it, but I will definitely sell covered calls there. So keep an eye out for that. Goldman Sachs, look above and fail kind of scenario here. Probably will retest 170 again, and we'll have to reassess at 170. I was hoping for a breakout at 180 when it kind of opened right under it on Friday, but then it was not. It had a little bit of a pop, right? Like it had a 1.5%, 1.5 point pop, but then it went right back down. So look above and fail setup. So 170 is the target here on Goldman Sachs. Next one, Intel. Lots and lots of there's a huge bear gap that is open, obviously, but then lots and lots of calls on 44 calls that were taken for Intel. The last 1 hour of trading on Friday, they did pick up a lot of Intel 44 calls. So they're technically down about 18%. I'll track the OI tomorrow morning again and let you know in more detail as to what's happening. They closed right at the level as well, which is very interesting. But we'll see. 44 call. That's the one that you want to look out for on Intel on the weekly. So keep an eye out for that. JPM, nice little flag. If we can break about 173. I mean, I shouldn't say flag, but as much as people want to call this an head and shoulders, I'll show you a very nice chart about Tesla as to how many people have been calling an inverted head and shoulders. It's the same thing that I'll talk to you about again there. They keep calling this a head and shoulders. You know where you want to play your head and shoulders at? The head and shoulders have to be played at a neckline. Even the inverted head and shoulders, they have to be played at a neckline. If you are imagining this as a head and shoulders, what if the price shoots up here? You still want to call that a head and shoulders? Head and shoulders? Then a double top? How do you want to play it? You don't know how to play that. But then when the price comes right back down to 167, that is where you can play it really well, right? Like that is when you can say, okay, you know what? This is a head and shoulders. And then you can probably play it. So don't imagine things. TA is a lot helpful when you're very unemotional about something, right? So keep an eye out for that. And if we can break above 173, we'll go out. We have a target for about 175 to 177. That's the range that this break can kind of give you. So keep an eye out for 173 this week. Probably if there is a rotation into banks, we can probably play that. Next one is, let's go down to NVIDIA. This is a very common structure that NVIDIA kind of exhibits, right? If you see, we have a nice little consolidation, breaks out, nice little consolidation, breaks out. Again, after its earnings, it kind of consolidates for I don't know how many months, right? This was from May all the way to January. So almost, 7 months. And that's exactly what can happen again for NVIDIA before it kind of breaks out towards 700 or 800. So keep an eye out for that on NVIDIA as well. Last but not the least, I'll wrap up with this. So again, this is something that you can go back onto Twitter. You can see what I'm talking about. Lots and lots of people said this was inverted head and shoulders. Lots of people. Is that an inverted head and shoulders? Where is the price now? Is this an what is that? Now is that double topping or double bottoming or something? You're just imagining things when you're drawing something like that, right? If we did see a pop and we moved back to 261 or 265 261 to 255, that's when I would probably say, yeah, you know what, we are close to an inverted head and shoulders, and we have to be bullish on Tesla. If if it was not, this is not an inverted head and shoulders. You're just imagining things here. So that's essentially what's wrong with most people when they do analysis. But anyway, again, let me go over this one more time. I just wanted to make sure, like this was the drop, 40%. Then we have another drop here. This was sorry. I think I messed up there. Yeah, this was the first drop. This was the second drop. Um, yeah, this was the second drop. And then we had another drop here, which is again about 44%. We have another drop here, here. So let's see, 44%. We are still not there. 40%. We are still not there. So yeah, I mean, 160. That's where we have to go down to. So there's quite a bit that can happen here. And once we break this trend line, remember this trend line on weekly on Tesla. Once we break it, just go long. I mean, I think there will be a move like AMD that you'll see on Tesla. And will it happen tomorrow? I don't know. Will it happen in the next 6 months? Absolutely not, maybe, because I'm looking at the weekly time frame. This is a longer time frame, right? Like, so I really can't tell you when this will happen. But when it happens, stay long Tesla. That is all I can say. So that's mostly what I have for this week. I'm running out of time, but I will see you guys again on chat, again with our early morning prep notes, and let's kill it again this next week. 2 weeks back to back, we have 100% wins. No failed trades. That is like really good. Like my average somewhere around 75 to 80%. 100% is something else. But I hope we kill this week too. So have a good rest of your weekend, and I'll see you guys on chat later.